Hi everyone and welcome to our interest rate update for May 2015. I'm here with Rob Gilmour. Tell us a bit about the decision, Rob.
Yeah, thanks Aaron. Well, the Reserve Bank cut interest rates to a historic low of 2% today.
Another historic low. It was expected, at least by a lot of commentators. So again, tell us what's behind the decision.
Yeah, look, that's right. Look, it's carrying on with the same themes that we've already discussed. The Australian economy is in a transition. It is going through a period of below trend growth and there still is a lot of spare capacity there. Furthermore, the Australian dollar does remain stubbornly high and that is causing the Reserve Bank some concern, but also inflation is quite low and it is giving the Reserve Bank plenty of room to manoeuvre on interest rates.
Okay, so it was expected, it's good to see it's occurred, but some of those themes, those underlying themes, aren't the most positive, so where to from here?
Yeah, look, that's a good question. Any further cuts by the Reserve Bank in the level of interest rates are going to have a diminishing impact in terms of the stimulation it provides the economy. Furthermore, the data that we've been recently seeing does show that demand or household demand has started to pick up and unemployment numbers have tended to stabilise somewhat. But also, most interestingly, there was no forward outlook statement by the Reserve Bank today in terms of where interest rates might go. And only last week, Governor Stevens was in New York stating that there needs to be some caution about how far or how low one can cut interest rates.
So that kind of leads to the million-dollar question. Does this mean we're at the bottom?
You put me on the spot there. Look, economists spend vast amounts of time poring over data and trying to predict where things like interest rates are going to go, and at the end of the day you'll never get a consensus view that's correct. But that said, it does feel like if we're at the bottom, provided we don't get some deterioration in the Australian economy or some shocks from overseas, while I feel it might be towards the bottom of the cycle, we probably will be there for some time yet.
Okay, well, what about tips for clients? We always like to bring it back to a client-facing thing. Let's talk about our mortgage holders. What's the news for them?
Look, we've said in the past it's a good time to fix interest rates and lock in for long term and take advantage of that, but it's also a really good time to not only maintain repayments on a mortgage but look to increase them as well.
Of course, it makes a lot of sense, right? I mean, there's a lot of interest that can be saved. You pay down the loan quicker. It's a brilliant time to do that, yeah?
Absolutely,
yeah.
It's a very unique time to do that.
Great. And our investors, what's the news for them?
Yeah, look, again, more challenging for self-funded retirees. Look, investing at this time of the cycle in assets like equities, property and bonds does have to be done with a high degree of caution, as what we're seeing not only in Australia but around the world, investors are making investments and not necessarily getting compensated for the risks that they're taking on in order to try and find those higher returns.
Right, so that's a tough position because it means that money's cheap, so the cost of the asset's more expensive. So what do investors do in this market?
Yeah, look, that's exactly right. So assets are more expensive, and what it does come down to, and what I always tell clients is, it's not only important to invest for income and growth, but it's also important to invest to protect one's capital. And there are alternative assets out there outside of the traditional asset classes, things like private equity, real assets like infrastructure, and it does come down to finding the right balance in a portfolio.
Understood. And well, look, that's our rate update for May 2015. We'll see you again next month.